Today I wanted to talk about the 5 investing rules that I pretty much live by when it comes to investing my money into the stock market and so forth. So, the reason I wanted to make this video is because, especially as someone who's in my early 20s and not pulling in a lot of money, doesn't have a financial degree or anything like that, it's hard to find sound investing advice if you're looking in the wrong spot. Now, there's a lot of good YouTubers out there that I personally learned a lot of my information from when it came to investing and kind of how I started investing. So, I wanted to give you guys 5 investing rules that I personally live by. Now, these work for me. It's not financial advice, but hopefully you guys can follow one of these rules or maybe all of these rules and see how you grow and get your net worth up, stay consistent, and avoid a bunch of stress, because that's really the main thing that you want to do when it comes to investing, is just avoid as much stress as possible. So for rule number 1, I invest every month no matter what. So even if I can only afford $10, or if whatever stock slash ETF I'm investing in is 30% down, I'm always investing my money. Now, the main thing with this is you can invest monthly, you can invest weekly. It really depends, up to you. But the whole point of investing no matter what is because you'll hear this thing when you start learning about investing, or you might know this already, but a lot of people will say time in the market beats out timing the market. So to basically describe that in super simple terms, it's really hard to time the market. And what timing the market means is thinking to yourself, okay, I'm going to invest when this stock is 30% down because I know in a year from now it'll be 50% up. That's virtually impossible, because if you could do that, or if there was people that could do that, they'd be multi-millionaires. It's really impossible to time the market properly. So you'll hear that time in the market beats that out. So by getting your money in the market and just getting it to start working for you, that will always beat out trying to time the market properly. So that's my first rule: invest no matter what. Now, my second rule is I never invest money I'll need soon. So like you guys might have seen in my first video that I posted, where I invest about 51% of my income. Yeah, that's a big number, but I am very careful about that number. That money I don't need right now. I have a pretty low car payment. I live with my parents. My expenses are low. I have no debt. All my debt's paid off. So when I'm investing 51% of my income, I don't need to touch that money for a long time. Now, for example, if I know, let's say in a year from now, I'm going to need $5,000 for something. Well, that I won't invest that. That will go into my high yield savings account and start building interest. But once again, my high yield savings account, that's liquid cash that I own because it's my savings account. So I can pull it out, no penalty, no tax, just my money. Investing is a very long-term game. The stock market can go up, it can go down, it can stay sideways, but over time, historically, it tends to go up. So, I don't invest money that I might need for a vacation, but I invest money for my long-term, older future self. So that's my second rule. I don't invest money that I'm going to need soon. Now, rule number 3 is to keep it simple. This is the most important rule, in my opinion, if you don't want to deal with stress. If you can afford a little bit of stress and you like to play with it a little, that's totally up to you. Me personally, I find investing kind of stressful. And what I mean by that is, I know it's a long-term game. So the less I have to worry about it now, the better I feel about what I'm doing, if that makes sense. So, I used to think to myself, okay, well, I got to pick this tech stock that's going to blow up 200% in the next 5 years. Well, one, how do I know it's going to blow up 200%? I don't. And two, it would probably be a lot safer for me to park the majority of my money into an index fund like VU or SCHD or VTI. These ways, you're getting your portfolio diversified automatically, and you're getting rid of a lot of the risk. Now, I can break down a video on VU because that's probably my main holding right now in my Roth IRA account is VU. And I can break down a video as to why I invest in VU. But in my opinion, it's the best thing to invest in if you want to not stress and, no guessing, just long-term growth, putting your money in somewhere that historically has low volatility but high growth potential is the best way to do it, because then you don't have to check it every day. You can pretty much assume that if your money does go down, it's always going to go back up in the long run. So that way, by rule number 3, by keeping it simple, you don't have to overcomplicate things. You put your money in somewhere that's going to return, consistent gains to you, and just slow stack your money that way. So for rule number 4, now this is a super important one too that I see even my parents messing up, is ignoring the noise. This is probably the biggest one. When the market dips, do not panic. Do not chase hype when something pumps. TikTok, Twitter, the news, it's always going to make investing feel urgent. It's always going to make it seem like you got to do it right now. And I do agree with doing it now, but it's going to seem like, we're on the brink of collapse. If you don't pull your money out now, you're not going to make it. Or vice versa. We're on the brink of economic, you'll hear Trump say a lot that we're on the brink of, an economic rocket ship. So then you start thinking, oh man, if I don't get my money in now. No, I don't listen to any of that. I stay with my consistent investments. 99% of the time, the best move is to invest dollar cost average. So put as much money as you can realistically afford weekly or monthly, and just stay the course. The noise gets really loud, but you want your plan to be the overall thing you're following. One thing that really started my investing journey was to change my mindset. Before I started investing, I would see days that are red. So the majority of the stocks, are red. And I would think to myself, oh man, all these people are losing money. But now when I see red, it doesn't bother me because I know I'm lowering my average price because I'm consistently buying. And now when days are green, I used to think, oh, there's probably people selling. Well, I don't sell anymore. When I don't sell at all actually. When it's green, I think, oh great, I'm making some money and I'm still buying in. So I'm getting some of that, return. So at the end of the day, rule number 4, ignore the noise. Get an investment plan that works for you and don't listen to anything. Now, there is a caveat to that. If you're investing in, let's say, a business and the business releases their statements and they say, hey, we're shutting our doors. We're closing down in the next 3 months. You probably want to sell your shares. But that's why, referring back to rule number 3, I like to keep it simple. I like to invest in ETFs where I don't have to, and put my money into a certain business and I have to bet on that certain business to do really good. I can invest in something like VU. I get a diversified portfolio automatically and I can just chill. I can ignore the noise, consistently invest my money, and get some pretty nice gains and returns. Now, rule number 5, I invest like I'm building freedom. So I don't invest to just have a big number in an account. I invest because I want financial freedom. I want freedom to go on vacation. I want freedom to have a family. I want freedom to live my life by my own terms. Now, I love my job. I love where I work. Granted, I don't get paid a lot of money, but you have to look at investing like you're building that financial kind of staircase up. Every dollar I invest gets me closer to that. Now, that's an important statement. Every single dollar I invest gets me closer to my freedom. By doing that, when I invest $1, I feel really good about investing that dollar. When I invest $10, I think, man, that was a good investment. There goes $10, and now that's one step closer to my freedom. Because who knows? In the next 5 years, that $10 could turn into $1,000 with my current investments. So, you just have to play it, once again, like I've been kind of preaching my last couple videos. You got to play the long-term game. I know we all want to get rich overnight. If I could flip a switch and I had $1 million in my bank account tomorrow, I would run to the switch and flip it as fast as I can. But realistically, not everyone gets rich overnight. Not everyone can pick the next stock that's going to blow up. Not everyone can put $10,000 into a tech stock and let it blow up. A lot of people are just average people, and you just need to build money long term and invest like you're building that freedom. So that's my rule number 5. So to kind of run through all my rules again, my first rule, invest every month, no matter what. Second rule, I don't invest money I'm going to need soon. That type of money can go into a savings account. If I know I'm not going to need this money for a couple years, I'll invest it. Rule number 3, keep it simple. Find some ETFs you like. Find something that you don't have to look at every single day and get worried if it dips or drops. Rule number 4, ignore the noise. Don't panic. Don't chase certain stocks if they're doing really good. Find something you like it goes right back into rule number 3. Keep it simple. Keep investing. All these rules kind of play into each other. And then rule number 5, have that mindset. Invest like I'm building freedom. I think to myself, every single dollar, every single penny I invest is going to gain interest over time, and it's going to build me that financial freedom. So these are my 5 investing rules. Nothing fancy, but I promise you these habits and these rules, if you apply either one or all 5 of these rules to your financial plan and your financial investing plan, it really works. My investing account has done nothing but go up because I do nothing but consistently invest. I don't sell any of it. I have simple holdings in simple ETFs, and over time, that money has just continued to grow. And it's very, very stress-free for me, which is the biggest plus. So if you're just starting to invest or starting to slow stack, you're doing it right. I was reading some of the comments on my other video, and I was trying to respond to everyone. And there's a lot of people who are my age, younger, and starting to invest, and that's freaking awesome. The younger you can do it, the better. But if you're older, if you're in your 40s, 50s, or 60s, it's never too late to invest. So drop a comment, share one investing rule you live by, and have a good day, guys.